We told you earlier that JSW Infra and GMR Infra, both those companies opting for 525 route in a bid to refinance debt. These two companies are only the latest from India Inc. that are going the 525 way, an option really that was available since a year ago. GMR Infra is 3% lower. You have JSW Steel also 1% lower almost. Is it a viable option, and is it a more viable option to refinance loans? To discuss that, I'm being joined by Pradeep Kumar, Managing Director and Group Executive of Corporate Banking at SBI. Mr. Kumar, always a pleasure chatting with you here on Bloomberg TV India. You know, I want to start with something that we were just mentioning, that it's been almost a year since you've seen this 525 rule that was allowed, but we hadn't seen much traction. Now all of a sudden you're seeing a lot of companies and a lot of corporates really approaching banks for refinancing. What really has changed in the last 1 year, sir?
The fillip came from the August circular of Reserve Bank of India, where they said we can do a refinance provided there's a new banker which comes in with 25%. And of course later in December, when this 25% was also knocked off. So we have been discussing with many of the promoters for the various projects. I think as of now, SBI, we have done 4 such cases amounting to about 6,600 crores. 7 or 8 more are in the pipeline, and some of course are in the informal discussion stage. We have done whatever we have done so far is by the August scheme, where a new banker has come in with the 25% exposure to the project, or 25% exposure to the project. Of course, there are some proposals in the pipeline which are based on the December circular, where there are no new bankers will be coming in. The worry about the bankers was in the December circular. There is something called a provision to be made for the net present value of the loss, if any, because of the refinancing. I think we had also requested, banks had also requested RBI to do the net NPV based on the base rate, but RBI has still not responded. So there has been some delay in some of these the projects which are being refinanced as per the December circular.
Okay, we've been speaking to a lot of your peers. They're saying they're rejecting some of the requests which are coming in under 525. You're saying you have about 7 to 8 more which are yet to come, but have you rejected any?
No, we have not rejected anything. Sarah, there are a lot of companies for which we are in discussion. 7, of course, in a formal stage of discussion, many more under informal stage. I think the discussion primarily is on how to reduce the NPV loss, if any, to the banks, or if there is a loss, how will the company or the project compensate the bank for the loss in NPV. That is the discussion that is happening.
We were talking about 2 companies from the infra space, JSW and GMR Infra, but what are the sectors that are largely approaching you?
Primarily we are seeing power. We have done 1 port, all the rest are only power. Of course, we are also looking informally at some roads. Formal proposals are yet to come. Some roads also will come.
Okay, so if some of your peers are saying, you know, rejecting the proposals or the requests coming in, what are some of the parameters, if you can help us understand, that you keep in mind before allowing this restructuring?
No, it's a refinance. It's not a restructuring. It's refinance. I want to make it clear. Things on interest rate, the remaining period of the project, the PPAs that are available, and these things are all taken into consideration. The coal supply, the fuel supply agreement. These are things which are taken into account while having a relook at the project for refinance.
Fair enough. How well would you say this move is really resolving the asset liability mismatch that was seen in large loans, and by when do you expect the results will start showing up, at least as far as plugging the asset liability mismatch is concerned?
These are all standard loans which have been refinanced, so they continue to be standard. Though if there was any stress, that stress has been removed. That is all it is. I don't think there is no result in all these things. It eases the cash flow position of the project, and perhaps will give the promoter some money which he can, when the need arises, can invest in new projects.
Before we let you go, I want your comments on the new debt restructuring guidelines that the RBI has released about 2 weeks ago, Mr. Kumar.
See, SDR is a part of a restructuring process. It is not a separate process by itself. It is an enabler for the banks. The only problem is in existing cases of restructuring, this has not been taken into account. There is no agreement for the strategic debt restructuring, or that is basically conversion of debt into equity, is not built into the agreement. On all the CDR cases, we have an agreement to convert the funded interest term loan to equity subject to a maximum of 10% because that is the RBI guideline. This will enable us, especially if we have to relook at many of the cases, CDR cases already restructured, if they come in for something new. Of course, at that time, I think banks will have a look at it, whether there is a need to do a SDR at that stage.
All right, sir. Thanks for joining us with your perspective. GMR Infra is down 2.5% in trade today. Reports suggesting 37,000 crores, the kind of debt it is sitting on, seeking a recast of that. So that's just the latest company to